Well, good evening, everyone, and thanks for coming to this live session. I'm going to run through some of our core companies and make some comments on where I'm seeing the small cap market. Just a quick introduction. Most of you would know me. I've been a broker pretty much since November 1998. I moved from Sydney. I ended my career actually as an acting sergeant of police. So I was running some operations, sometimes plain clothes. And I decided to become a small cap advisor. And I've been doing that ever since November 1998. And I've seen, and I believe I've almost heard it all. And I've survived the dot-com bubble, other bubbles, boom, bust. So I'm hoping to relay some of my experience, and those on the call should remember that it's the toughest game in town, and you've got regular players of lotto that would be spending up to $10,000 a year, some of them, to win $13.50 if they're lucky. So this is really tough going. It's not for everyone, but all I can do is tell the truth and do my best. So there's the important disclaimer. This information is true and correct as of 30 seconds ago. None of the advice in this presentation is to be taken as personal. I don't know most of your financial situations at all. I am going to be making some forward-looking statements, and that's based on my experience. It's based on fundamentals. I'm not trying to get you to buy the stock to sell to you. Not at all. I'm only going to cover stocks where I'm in there and I'd consider buying it at the same price. I don't do that shit. And anyway, there's a disclaimer. Read that at your own leisure. So tonight, people say comedians should get some new material. I'm revealing a new stock. Some of my clients will know what it is and have been buying. Every client really had the chance to inquire about it. So anyway, drum roll, here we go. Here's the new stock that I'll be recommending. Curtains are a bit slow. And the company is a small cap biotech called Cinta. Code in Wheel of Fortune language is an S for Sam, N for Nelly, T for Tom. So Cinta is the new stock. And I'm going to explain why I think this is an outstanding opportunity, albeit with a lot of risk. So Cinta is into cancer, skin scarring, and neuroinflammation. Those that may remember the old Farm Axis. Farm Axis used to be a Days of Our Lives stock where you tap up the market depth and it was 27 to 28 cents pretty much every day of the week. So they've rebranded into Cinta. So here we have the capital structure. The shares are trading around 1.7 cents. They have been trading at between their all-time low recently of 1.4 cents. Market cap is around $20 million. And as you can see, there's really not much enterprise value for where we're at the moment. And they are expecting additional funds, as I said, to come in. This stock does have quite a high institutional ownership. So major biotech analysts that run funds were attracted to it. So obviously Platinum Investment Management are worth following. Bianca Ogden is on the register. They recently increased their holding to just under 20%. Institutional ownership can be a blessing and a curse at the same time, because when they get angry and they need to get out or funds close, they can certainly do some damage to the share price. But this thing has been in the mother of all downtrends, and I guess they're not really on their own. So we have highlights here from the March quarter. So we're into myelofibrosis, phase 2 study. Recruiting is on schedule. So this is a rare form of bone marrow cancer. They do have some other trials which are happening. And one of the key points is that they've sold their mannitol business unit and they're saving $14 million, major cost reductions as well. So we're now moving into phase 2 studies, and they are on track to get the recruitment. I think these curtains might have overstayed their visit, so you're gonna have to bear with me. So we have the potential to deliver some near-term value here. We have these trials. The addressable markets are quite large. The scar prevention is in association with Dr. Fiona Wood, who's involved there, and this is with burns and scarring. And an interesting study is the one into IRBD and Parkinson's disease, which I think is quite a great study. They're going to have data, and they're in phase 1, and they're not actually paying for that trial. So we have significant news flow to come with these trials. So what really you want in a biotech stock is news flow. The share price is around that 1.6, 1.65 cent level. Does have a lot of institutions on the register, and based on my meeting, Gary Phillips did do a roadshow. I came away from that meeting very enthused, and the stock certainly fits my risk reward scenario, where I'm always looking at juniors with 400 to 500% plus potential. So I've just thought it's worthwhile introducing this company. Obviously, I've flown through it. But anyway, now some biotech stocks to watch. This is a bit of a follow-up from my top stocks for 2024. Now, one of the problems in small caps is the existence of the Redheaded Stepchild. And these always provide some issues. It allows clients to have something to say. It allows numerous questions. And I think the Redheaded Stepchild is always a company that, with the anger towards that unfortunate one, is based on a person's entry price. And by that, I mean, if someone buys a stock at 10 cents and it's trading at 11, even if it does jack shit for the next 6 months, they're happy. If they pay 10 cents for it and it halves through no fault of the companies, then it's a constant worry. Instead of realizing the fundamentals and perhaps buying some more, they stick their head in the sand and go join a cult. So anyway, I've had plenty of these over my coming up to 26-year career. The good companies always overcome it, and this is an interesting one. I was behind the IPO of Exf Farm. I was one of the early seed investors. I helped raise some money to get this thing listed. It did extremely well. That chart won't show it, but it actually touched $1 from, it was a 20-cent IPO. It did get down to about 14 cents. I announced that I was selling some shares at $1. Unfortunately, I only sold a souvenir amount, and that contract note certainly won't be going to the pool room. But they got caught up in one of the shittiest biotech markets. They were unable to deliver a commercial outcome. Raising money was near impossible. They passed around the plate at church and only raised $13, $14. So again, we had some major issues, and it was a stock really that some clients who who sold out did exceptionally well. Some of us that did the sums or had dreams of a Lambo, of a waterfront property, got taught a lesson, and it was quite a spanking. So that will happen in your speculative career. But anyway, not everything is dead forever. So Exf Farm is coming back as Trip Therapeutics. So this company is listed on the Canadian Stock Exchange and is into psychedelics, which is a new form of treatment, and it's addressing some serious issues. And I think that we're going into a sector not dissimilar to the early days of perhaps cannabis or cannabinoidals. I was involved in the refloating pretty much of botanics, which we did at 2 cents, which was essentially a shell that went into a CBD treatment for acne. They managed to catch quite a wave, and from memory, that stock peaked at about 29 cents. So already they've had some positive efficacy data, especially with binge eating. And I think that this is certainly an area where it's worthy of further research. And already the TGA has pretty much accepted that psychedelics are going to be a treatment, and a realistic treatment, certainly of the future. And it's an area which could be quite successful. So one of the other important aspects of dealing with any company is the management and scientific advisory board. I've met with a couple of these people, Jason Carroll, Jim Gilligan in particular. I've been to some presentations, and I'm impressed. I think that this is certainly a new area. You're always quite nervous going into, it's always hard to be first, so to speak. This will probably become the first pure psychedelic play on the market. And in some cases, it could be better to go second. But anyway, this certainly will be a test case. I know that Jason Carroll is one of the most enthusiastic and determined CEOs I've met, and he's put, I believe, circa $500,000 to $600,000 of his own money into this RTO, so to speak. So management have put significant funds into the company, and I'm going to reiterate that there are no cheap shares. Everyone's set to 2 cents. Those that backed the convertible note to keep Trip going and to assist in this IPO process will be awarded a 4 for 5 option. So everyone's interests are aligned. So what we have with the psilocin is binge eating. Already it's shown excellent results through IV. Fibromyalgia or chronic pain will be entering phase 2, and IBS phase 2 as well. And they're also tied up with some pretty impressive organisations. So there is certainly a pipeline to come. So already very exciting results for binge eating, or pretty much I'd put it down as carbohydrate addiction. So it's subjective. It's a case of, well, I felt like having a bucket of KFC with a Zinger burger on the side. Now I don't feel as hungry. And this could do quite well. And the results thus far, as I mentioned, are highly promising. So what we have is Exf Farm shareholders will have 40% of their original holding. The shares went off the boards or were suspended at 1.1 cents. They have been repriced to 2 cents. So if you had 100,000 shares, it was showing a value of $1,100. Now you have 40,000 shares at the base case of 2 cents, worth 800. So pun intended, everyone has been given a haircut. I believe that it was done fairly. Obviously, this is a reverse takeover. So what we end up with is an indicative market cap of $22 million, or a intrinsic value, or EV, of around $15 to $16 million. I'll just go back. So I'd like to reiterate that I got great support to assist in this RTO process with my sophisticated investors, with those that were prepared to put significant funds into TRIP to see this RTO succeed. Existing shareholders of Exf Farm were offered a priority offer entitlement. They did have a chance to apply for shares. There wasn't a huge rush for that, but I guess it's a case of it's an entirely new sector. Psychedelics, obviously there will be some skeptics out there. And again, Exf Farm, being an Exf Farm shareholder in the latter stages, would have been like being sandpapered to death. So I'm pleased to report that the settlement of the shares has occurred, and we're now looking at a relisting date. Now, I think since it's going to be at 2 cents and we do have quite a bit of stock, that my only promotional activities or mentioning it really would be close to that price. If this does what Narada did in 3 or 4 days, or what that absolute trading beast Osteopore did intraday, I'm certainly not going to mention it. Now let's look at some stocks. Adulta trading around 2.9 cents. They have had exceptional phase 1 extension study results on AD214. So what this has done has accelerated the partnering efforts. So this drug is for idiopathic pulmonary fibrosis, which is an insidious disease. Survival rates are barely past 3 years, if lucky. They are working on next generation cell immunotherapies in joint venture. The company and Synthesis Bioventures are actually quite excited about this. I sat on the webinar and you could just feel the excitement coming through the screen. They do have a $3.7 million facility to really get them through and accelerate this. So I believe that as what happened with Nina Webster's dimerics, once you're able to come out with a decent partnering deal, then you get the attention you deserve. I believe this company had, on the basis of eventually getting the deal, has great upside. I think they've got more than AD214. And what Tim Oldham has made clear in his webinars is that they'd like to see the total investment in AD214 return to shareholders. It's an interesting subject because they've spent well over $30 million thus far. They've had to go around in circles with how the drug can be administered. And as with biotechs, they always take longer than you expect. Narada was trading at one point below cash backing, which is, it's just absolutely bizarre. I think they got down to about 1.9 cents. They came out with some efficacy results of the brain injury drug, and a few days later, they reached a peak of 17 cents. So this provided early those that bought it at or below cash backing with a chance to take profits into the trading frenzy. You can't really blame people that I put them into the stock because they had the money, they had the right attitude, and then suddenly they're faced with an 8-bagger within 10 days. Narada then announced a 7.5-cent placement, so sophisticated investors then had a chance to go back in at 7.5. But I think with that placement, I don't think investors were in the right headspace. They just had a massive dopamine rush. Then the stock got slapped around. Then suddenly they're raising money at 7.5. But they've had some really strong results on the brain injury drug, and we're seeing trials coming through. Obviously, what led to the share price getting poleaxed was they had a tox result with the cholesterol drug, which was unfavourable, and that project pretty much shelved for now, even though they may look at that or other compounds, and that pretty much caused the share price, as silly as it sounds, to go below cash backing, despite having this brain injury program and having what I believe to be a very capable board of rescuing it. And that's exactly what's happened. So again, around these prices, yeah, I think it's probably not as good buying as it was at 2 cents, but already we've seen Agenica have quite a sustained run. It's managed to hold, and this might be a decent comparison. Some stockhead articles have suggested that this they're heading towards that Neuron path, but again, take that with a salt silo. Radio Farm, despite putting out positive announcements after positive announcements, is really under pressure. This has been mainly due to the financing facility with Lind. That selling pressure has been relentless. We did see the share price up around the 9 cent mark. Then suddenly there was some shortfall at 7 cents, and the share price has been drifting lower ever since. We do have research reports from the likes of Diamond and Jones, which place a 70-cent valuation on the stock, which from 4.4, 4.5 seems a pipe dream. And there was another recent research report which put a 26-cent target on it. So despite the extreme negativity, I think we do have quite a bit of activity coming up, and this has excellent potential to bounce from a very low base. So certainly one not to give up on. I believe that once you've got sustained selling pressure, that others lose faith in it. But yeah, this certainly has been a tough one. But again, we could see signs of a recovery. Chimeric, another stock that has been beaten up in the biotech bashing. Jennifer Chow has put out some amazing announcements over the course of the last year, and the company's share price has just been hammered. They now find themselves trading around 3 cents. What they have done is outline their clinical milestones, and they've got a patent on the core NK technology. So we do have a lot to look forward to with this company. And again, I believe they're certainly undervalued. Dimerics, one of my major biotech success stories. They were trading in that 8 cent region, and then based on the phase 2 trial, they initially had a run up to about 70 cents. Then the market really didn't like some of the results, and there was, I believe, a fat finger involved from someone that sold the shares a little bit heavier than what they would have liked to. And then the share price found itself down around 6 cents. They did a rights issue with 2 classes of options. Can you believe? They provided a short dated option and they provided a longer dated option. So DMX 200 has first passed its first efficacy interim analysis. They announced a partnering agreement as well, and that saw a significant recovery in the share price. So far, there's no safety concerns, and we are waiting on the secondary readout. So it's a case of it was a binary outcome when it had the run. This one differed a little bit because they took the opportunity to raise $20 million, which was announced concurrently with the results. So I know there was a fair amount of angst from those shareholders saying, well, if this thing could have run well over 50 cents, but they've announced a placement. And from my liking, those that came in and handed over $20 million deserve a chance at upside. So there was plenty of opportunities to buy this thing sub 8 cents. Proteomics has been a very good stock for us. Essentially, it's six-bagged since the 17-cent lows. That's how long we've been following it. It has been under some recent pressure. Obviously, we've had a delay in the commercialization of ProMarker D in the US. The endometriosis tests early stage have been very positive, along with the test for esophageal cancer. So I know brokers value this a lot higher than the $1.08 share price thereabouts, but it is going to rely heavily on revenue and getting those first sales in the alliance with Sonic Healthcare. And obviously ProMarker D is very accurate, the test, in predicting the onset of diabetic kidney disease. So certainly it's a growing area in the world with the rampant carbohydrate addiction and the unhealthy lifestyles we're seeing. So diabetes rates, particularly in Asia, are skyrocketing, but now keep eating the rice. Anyway, certainly one to watch. It does trade on low to moderate volumes, but when there's negativity, it's certainly the market depth gets sucked up and you see some panic. So now we're going to move on to some mining stocks. Maronan. I played an integral part in the Maronan IPO. This was in April 2022. We IPO'd the company at 20 cents. Again, there was no cheap shares, no seed capital at all. It has been a bit of a slow grower, but what they've come up with essentially are two 30 million tonne ore bodies. That includes a silver-rich indicated resource. And these resources are in the Cloncurry region. And what we have is an opportunity where there are 118 million ounces of silver. And there is a chance, one of the threads you'll see on X is silver squeeze. There has been some calls that the silver price could be manipulated in a northeasterly direction. But what makes Maronan interesting is the copper gold component as well. And we do have a lot of the resource, especially the lead silver, very close to surface and very simple metallurgy. And I'm certainly looking forward to the mining study that will be released hopefully over the coming months. So again, one of my favourite mining stocks. I should reiterate that at the IPO, there were 30-cent unlisted options which expire in October. So that also gives the company some funding options if the share price can get well above that. Obviously, we need to see the indicated resources drilled out further to allow a mining study. But I see the biggest threat with Maronan is obviously a predator, because these days it's cheaper to buy ounces and tonnes than go out and explore for them. So now to the company I refer to as the multivitamin of junior resource stocks, Red Metal, trading around 16.5 cents. I've been a long-term backer of this company and Rob Rutherford. It's never let me down. And I go back to my relationship with Minotaur, which spun out into Andromeda, which then spun out into Demetallica and eventually got taken over. That Minotaur, since my involvement in that company back to 2001, never let me down as well. Sure, these companies don't get the attention on forums. They're hardly the stock you're going to get tipped at the pub. But again, they're just solid companies that go about their business. And the reasons why I love Red Metal are that it's got more than one project going for it. Now, I should make it perfectly clear that I did a significant capital raising for them at 8.5 cents. That was fairly recent. And with that, we received a 1-for-2 13-cent unlisted option, which expires in October 2025 from memory. So we are as full as a state school in this company. Clients are in at very good levels, and they may sell if they have bills to pay or their divorce lawyer. So again, I'm not going to recommend this as a sell anytime soon. I believe that there's two major projects that underpin this company. Cybella, which is a new rare earth discovery, 20 k's from Mount Isa, that's showing signs of being a very large rare earth system, easily treatable, low cost processing in granite, and they're going to go and drill 10,000 meters and just see how big this thing is. Phase 1 metallurgy test results confirmed, given the big tick by Ansto. The other potential company maker is that they own 53% of Maronan Metals, which is shaping up technically, as I explained on the last slide. Now, what I love about Red Metal is they always want to be a small company with a big share price. And the sizzle is that Rob Rutherford and his geologists are out chasing elephants. And these are big, big targets. And in particular, we have the alliance with BHP on that Yarrie copper gold cobalt project in WA, in the Patterson region that surrounds Rio's Winu discovery. They are looking at some other copper gold, plus they have the Lawn Hill project as well, and they've been awarded drilling grants from the Queensland government. So whilst the share price and market cap is underpinned by one quality investment and one potential company maker, I think you could see some decent upside should one of those big drill holes hit. And it's very rare for juniors to go out and pretty much have the balls to drill these projects. And Rob said to me at one point that if you're not failing, you're not doing your job, because the default position of trying to find a major mineral deposit is failure, and you just have to go out and drill the holes. So when you have a miss, obviously you get slapped around a bit, but again, the value's underpinned. One of my, I call Line Selection Group a bit of a place to park some funds you don't need tomorrow. This is a LIC that is run by Hedley Widdop and the team. Hedley's a veteran of the investment seminars and conferences. I've seen him around for years, and the stock is at the moment trading at a hefty discount to NTA. They have recently been deploying some cash in a few juniors, but still have well over $60 million in the bank to deploy. Some may argue that they should be spending their money much quicker, but they do take a more measured approach. So what I'm saying to my clients is a good place to put some funds aside, remembering that the share price will increase incrementally with the NTA, but you always got to expect a bit of a discount. And it's probably not a bad place to have some funds just in case we get a discovery and you have a monumentally large tax bill. So one to look at. Alchemy was a stock I raised some money for, from memory, at 1.1 cents. They did have some success, initial success with lithium, and it went over 5 cents. The stock now is back to that 0.6, 0.7, might trade at 0.8, but they do have a strong cash position. They are looking at some soiling pretty much for gold, and they're close to the Mana lithium project as well. Yellow Mountain, again, working on access agreements, and we are going to have some field exploration happening as well. The Sandfire joint venture unfortunately got handed back to them, but again, they've found some iron ore potential as well. And they do have some gold projects where they might get a royalty from production. So certainly one to watch in the event that we do see a return of the trading frenzy, because this multiplied very quickly. I worked with the managing director, James Wilson, at Argonaut when I was there. I certainly have a lot of time for him. And I believe the breakup value is certainly worth more than the market valuation. And the key is for James to realise some value. So there's one stock sub 1 cent. Omic has been a very painful investment for us. Brad Valukas and the team have certainly been up against it ever post-listing. They ran into a terrible market for gold juniors. They struggled to get capital raisings away, and there was this hideous convertible note that hung over them, and that was based on the acquisition of the Sandstone project. So what they've done is they've cleared that convertible note, and they've had a recent capital raising. The resource at Sandstone is 946,000 ounces. They have just done a drilling program, and results are fairly imminent. Brad Valukas used to work for Northern Star. He did spend some time at the Pogo project in Alaska, and he's certainly one to watch in the gold sector. And I see this company as having enormous growth potential with Sandstone if they can move towards production, because in that region, if you look at the ounce potential, it's up around that 5, 6, 7 million ounces. And I think at some point, someone has to build a mill and get on with becoming a miner. And I assure you that Omic are certainly heading towards the production decision and hopefully regenerating the region. They recently did a placement at 3.2 cents. The share price was around 5. I see it's come under a little bit of pressure, but that's to be expected when those that took the 3.2 centers are still in profit. So certainly one of my longer term gold stocks just really ran into some bad luck, ran into a shitty market. And again, it has been hard for companies to raise money over the last couple of years that weren't in the lithium sector. Mako Gold, another junior gold company based in Côte d'Ivoire. They have been toiling away with a resource that's looks as though it'll head over 1 million ounces. They recently reported some very high-grade rock chips. And again, it's another one that's obviously you can't drill for free. Drilling costs money, even though it's in Africa. They have had to do some capital raisings all the way down. They did do a raise at 1 cent, but what happened there was there was a trading frenzy, and the computerized traders don't read announcements. So whilst this was underway, the share price reached a high of 3.2 cents. So their capital raising got absolutely flooded, and they had to send a lot of the money back. So again, not really a total case of investors liking the projects. they just wanted the free money, and I don't think you can blame them either. They do have the Pahorgo manganese project, which has had some samples up to 25%. Looks like a decent system as well, but the focus will be growing the gold resource. Peter and Ann Ledwidge were previously at Orbis Gold, which from memory got taken out for about $187 million. So he's aiming to build up the resource and again head towards production. So they're trading around 1.4, 1.5 cents. Triangle Energy is really my only oil and gas recommendation. I used to do some financial press in their building. I always looked at their office, and then I started to do some research. I have met with Conrad Todd. I have read into the Perth Basin and the large takeovers from Gina and MinRes. And it's exciting that they will be drilling some enormous oil wells with the potential for gas, and the upside is staggering on these. Obviously, with oil exploration, it's at the extreme risk end of the profile, and we're going to have hopefully three wells drilled. Some of the odds on two of them in particular are quite good, and what Conrad Todd wants to do is build a decent energy company, and they are bidding for blocks in the UK, and he does have a strategy in Asia in particular. So yeah, this one looks exciting. They recently had a capital raise, 1.6 cents with half an option. Again, the placement was done in a tight fashion. I couldn't get any stock. I then went in with clients and had many apply for overs. We were obviously in a rights issue, get your entitlement, but they were heavily oversubscribed and there wasn't many extras to go around. But pleasingly, the share price has recovered now from, it's around 2 to 2.1 cents. So a good shortish term return, but again, the real cheesecake is in an oil and/or gas discovery. Pac Gold was a North Queensland focused gold junior. It was one I was involved in the IPO. It was a 25-cent price. The share price did get to $1 at one point, but those with 100,000 shares probably saw $3 because you don't need a calculator. And again, they ran into a terrible market for junior gold stocks. Tony Schreck and the team have been working on the Alice River project, which is a very large project with multiple targets. And again, it's all about focus and putting out hopefully a high-grade initial JORC resource this year. And their targeting methods have been quite successful. So the share price obviously has come down to around 16 cents. They have been forced again to raise capital at much lower levels, but the stock is strongly supported by institutions. I think the Lao Resource Fund in particular are there. And we are looking hopefully over the coming years at a multi-million ounce target. And yeah, I think it's a good story, and you know, these things do take time to grow. Eagle Mountain, there's a little bit of a backstory to this one. I went through the AFR and marked stocks with a highlighter that I thought had potential, and this one was trading around the 12, 13 cents. I went in and started buying. I was then fortunate enough to do a 13-cent capital raise, and they came out with some great results on their copper project in Arizona, and the share price ran to $1.40. But what let us down was the fact that for many clients, they didn't hold it for the 12 months, and they were chasing that capital gains tax discount. And can you believe the share price did go below 6 cents at one stage? And Charlie Bass, who was instrumental in the success of Eagle Mining and Aquila, has put millions of dollars into this company all the way down. They've increased the resource at Oracle Ridge, over 28 million tonnes at a handy percentage, and they are going to be working on the Silver Mountain project, which has shown some uranium, thorium, and rare earths. So again, it's a copper junior that's been belted into the next postcode. I have noted that it has picked up from 6 cents and is now trading in the mid sevens on a little bit more volume. But when you've got the copper price around that $10,000 level, the market will start to focus on it. They haven't done too much wrong, but it just shows you that these things can take off on not a lot of news. And when they get into an uptrend, they can run like a canyon. And again, I think clients will start to think about, well, maybe sometimes I will take a 10 bagger. Again, the fundamentals were still supportive, and I think we're all guilty of not selling or getting complacent especially. So Eagle Mountain, one to watch, even though the share price has picked up from the recent capital raise. Copper Search has been disappointing. What you have here is a company that is as hero or zero as it gets. They're out looking for monster deposits in South Australia. Chances are that you're going to drill into a duster, or you might see some signs of the right rocks that isn't mineralized. They do have a really compelling target at Paradise Dam. I'm looking forward to this being drilled because they're very excited about this project. Again, the share price is around that 9.5 cent level. It was holding comfortably at 30 at one point, but again, the copper juniors have been belted. Duncan Chessel is certainly one that likes risks, because I believe he's climbed Mount Everest a couple of times. So again, you've got to have the balls to go out and drill these things. As you can see in South Australia, we're seeing Prominent Hill, Carapatina discoveries from having the courage to go out and drill them. So certainly one to watch. The market won't give any clues. If someone doesn't want to hold it, obviously the share price is going to come under some pressure. Saturn was a fairly new recommendation for me. From the lows, the share price has pretty much doubled. They do have 1.84 million ounces at Apollo Hill. It is low grade, but they're looking at a heap leach operation, and over 60% of the world's gold production comes from heap leach. It's where the gold is treated in acid as opposed to a conventional mill. So we are looking at a pre-feasibility study on the gold project. They are working towards hopefully a pilot plant, getting that into production. So I watched the growth of a company called Capricorn, Cody, C for Charlie, M for Mike, M for Mike, that pretty much has been a textbook gold growth stock. It's just really kicked on. They started with a low-grade project. They've made an acquisition and they've really grown. I know Ian Bamborough is keen to see this stock into production. And what has me somewhat excited is the exploration potential in that Apollo Hill region, where they have had some sniffs, and there's certainly the chance to find another deposit. So again, you've got 1.84 million ounces. You have a pre-economic study that showed good returns. They're moving into a pre-feasibility study on the project, and you have some exploration upside. So again, it's quite a tight register, not dissimilar to Red Metal, but probably a little tighter. So anyway, they're the stocks that I'm happy to run through. Obviously, some of the redheaded stepchildren haven't made this. I'm happy to discuss them with clients, but I think it's best to focus on the strength. I know some of the stocks are down, some of them well down on our entry price, but I keep reading the announcements, and I know those companies are working diligently on attaining their goals, and no doubt there'll be more to come, and there'll be the odd surprise. And I should make it perfectly clear that one of the most boring stocks I cover, Mayfield Group Holdings, code M for Mike, Y for yellow, G for golf, has been one of the most successful. It's doubled and changed. They're into electrical and engineering services and phone towers, and they're now paying dividends. And the market depth looked horrible, but they're starting to generate cash flow, paying dividends. The stock trades by appointment, but sometimes the most boring stocks can provide solid returns. And I think sometimes you've got to consider that a company like Saturn won't do much for some time, but they do have the underlying asset. Then suddenly they start to make positive announcements, hopefully a positive pre-feasibility study, and you're away. And then I think sometimes with gold companies, once you get one project into production, it becomes a bit of a sausage factory, and you can grow that way. I was instrumental at one point in helping Bill Beament raise funds for Northern Star and increase awareness of the company. They were trading at around 5 cents. Bill then went and bought the Paulson's deposit for 27 million. Shortly thereafter, they jacked the price up to 40 million. The shares got sold off a little bit, but Bill got into that asset, then acquired other assets, had some exploration success, and they pretty much 300 bagged. Admittedly, you would have had to been in prison with no Wi-Fi or in a coma to have held to 300 times. My laziest client, who's still lazy, managed to hold it to about $13.60. So it still hasn't changed him. He's still almost comatose, but he won't mind me saying that. So that's what we think the market should look like. But I can assure you, at times it's as pristine as a Portaloo. I don't know if you ever walked into one of them, but put it this way, it's third world country and then some. But again, you've got to realise that to make it in speculation, you are going to have some hits. You can't simply buy a speculative portfolio and do nothing. Even though you might get down on a company, you have to look at the fundamentals. And I think the other key point, which we're all learning, is I call it effective use of capital. If you make 5 to 10 times, take some capital and put it elsewhere, park it in a boring stock and put some aside for capital gains. So what I'd like to do is put up the watch list of the stocks I've covered. I took that screenshot after market, so you're welcome to take a photo of it and do a bit of a screenshot. Again, you'll see there the Radio Farm options, which still have a couple of years to run. They haven't really been too affected, but again, the leverage potential in them is significant if the company gets their shit together. Red Metals holding that 16.5 cent region. Cinta, my newest recommendation. Did a little bit of volume today. It's trading 1516. Again, I believe the all-time low is 1.4 cents. When the company, I believe, is actually in good shape. You can see there on Copper Search 9 to 9.8. Again, if someone wants out in a serious way, that could find itself at 8.5 cents. Dimerics has been very solid, looks strong. as I mentioned, a bit of selling in Oryaman, remembering that profit takers from the 3.2 cent placement are going to be around. Some of them might want to protect their capital gains. Eagle Mountain, nice recovery off some really stupid lows, 7.6 to 8. That run has been quick. I do have clients waiting for a bit of a pullback. Line Selection Group now takes the mantle as the days of our livestock, or let's call it the bold and the beautiful, where you can watch an episode, go back a year later and nothing's happened. But that will move up incrementally with the NTA. They are a seed investor in a company called Plutonic, and that could provide some serious leverage upon listing and or a discovery. So I think that's probably the most exciting boring stock I've covered in some time. Proteomics around that $8, $9 has been up into the 120s, around 130. Again, cops it on a not so positive announcement. And Saturn 23.25 did get up around 26, pretty much a double from where they raised some money. And Triangle still going to be doing some big volume as we wash through that 1.6 cent stock. So what we're all hoping for as speculators is another bandwagon to come. We want to see some stupidity. I've seen this since the .com days. Pre.com, actually, can you believe we're actually trading Optus warrants? We're trading warrants on the share price of Optus. Then we had a junior mining sector that became the shells for .com. And then we had those that put a website in or delivered wine, had these massive increases. We had a mining company, I think it was called Western Mining, that ended up going into sex toys. That became Adult Shop, and that was one of the stocks that went from cents to around $3. We've had the uranium bubble, which was, at that time, it was not quite as powerful as .com. So you had a couple of uranium companies, then that suddenly turned into a couple of hundred. We've had other bubbles, retractable syringes, childcare, eggs, cows, beef, childcare centres, probably mentioned that. But potash, potassium, when Borat was singing about Kazakhstan, he mentioned that. Interestingly, I was involved in the first lithium bubble, which goes back to 2007, 2008. That was Orocobre, and the only other stock you could buy was Galaxy. So Orocobre went from about 15 cents to, from memory, around $5. And this was 16 years ago. Obviously, lithium had another coming where you had juniors going into the $1 billion market cap range. We had the cobalt bubble, which followed lithium. We had the rare earths bubble, 2010, 2011. Combined that with some more sniffs in uranium, scandium, bit of interest in tungsten, tin. Then we had pretty much, go through cryptos. Obviously, crypto, the major ones have seen some volatility, but then you've got 21,000 shitcoins where fortunes were made and unfortunately lost. But I think what you've got with bandwagons and these bubbles is the potential to become addicted to gambling, to lose focus. You'll buy any stock that you get tipped, and a lot of them, once the music stops, they'll turn into shells, and you'll work out who wasn't genuine to start with. So I've seen plenty of these. Admittedly, we have caught a few as a client base, but the majority of my major client success stories have actually come from just being steady, sticking to the quality juniors, and some of them have returned multiple upside potential. My biggest client winner goes back to 2004 to 2007, where I fell in love with a gold junior called Ramilius. We were buying all the stock thrown at us at 6 cents. They then came up with one of the biggest gold intersections I've ever seen, and they 50 bagged. And clients that got phoned early might have sold too early. A client that didn't have internet access got out around that 50 times mark. So again, it can be all about timing and where you take the multi-bagger. But interestingly, Ramilius bought Mount Magnet for $38 million. Then at one point, they were actually trading below that market cap and went all the way back to 4.7 cents. And can you believe they 50 bagged again? So these are the type of opportunities. And you might think, well, it can't happen to me. Well, it can if you get in there and buy the stock, aren't afraid to average down, don't become too despondent reading X and Hot Copper. I remember a client who's now sadly deceased. He used to ring me at night, and yeah, he was annoying, but I actually kind of liked him. And he said to me, look, I'm never going to make $1 million in the stock market. I'm jinxed. And when I was floating Independence Group, this is 22 years ago, I actually said, well, yeah, you can have your whole 20 grand. And that for him turned into well over $1 million. I then floated Medusa, and he found himself with a couple of $1 million, and then he went heavy into Northern Star. And again, that's a case of being in there, getting involved, and being prepared to hold stocks through all the cycles, because in Independence in particular, in that nickel bubble, went to, from memory, about $10.52. And during the global financial crisis, which was the scariest shit I've ever seen in my life, they traded all the way back down to $1.15. And I remember fondly the conversation I had with him. I think it was a Friday. And I said, look, you're up well over $1 million. You've got to sell some of these things. And he said to me, oh, I'll talk to my wife about it. And the rest is history. So anyway, I hope you've all learned something tonight. I'll go back to that watch list, take a photo. We'll see how we go with these. As I said, some of them have been beaten up for various reasons. Once you're on the know, it's hard to really escape that. But Narada is proof that once you get a bit of interest, you certainly can perform. So I'll just leave that up for about another 30 seconds. So again, thanks for joining me on this call. I will be holding these sporadically. If there are any slots available, I know my clients really jumped on this one. I think that shows a little bit more interest in the sector, and it's a case of, regardless of what we're going through in the world, geopolitical issues, countries going through war. We have numerous other things with high interest rates, sticky inflation, talk of recession, manipulation in gold, silver. I think if you remain steady and invest in quality, eventually quality comes to the fore, especially in small caps, and you can make a shitload of money. And what I like about some of my clients is that they've done that. We've had a terrible 2 years. They haven't been great through no fault of our own. But the key with good people is they stay humble. So I'd like to thank everyone for joining me, and I'll see you next time.